Hello, Maverick traders, and welcome out to your daily market roundup. This is Ankit here, and I'll be breaking down today's market price action. It's Wednesday, July the 17th. Let's get into it. As always, we'll be breaking down today's market price action by looking at broader market analysis, bring it down to sector heat map, and then take a look at our drop opportunities ahead. Let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
As we jump into the market analysis, let's just jump right into the numbers here. Today, again, a pretty opposite picture on what's really happening in the broader markets and what's happening underneath the hood. So let's just take a look at the numbers here. Market sell-off. Again, looking at the Dow Jones, it was up 1.63%. But if you take a look at S&P, down 1.30%. Qs are down 2.79%. And the small caps are down 0.79%. So clearly, the Dow Jones were a winner today. Small little pullback in the IWM, but then we still continue to see some selling off taking place in those big tech. The oil did go up 1.03% and gold slightly down. So if you just take a look at the news for the day, again, nothing really on the headline, but we have the big tech that continue to sell off. So the massive rotation is continuing to play out. We're seeing the broadening of rally. So this is where it definitely is more exciting because we are not looking at the Microsoft and the Apple and the Google, but we can get out of those big names. And there's a lot of value to be had outside of that. Now, if you take a look at the advanced decline ratio and take a look at above and below 50-day moving average, you can see that even though 62% was on the downside in the decline, but we are seeing a 74 to 26. I mean, look at that improvement. I remember just 2 weeks ago, we did the class and then we were sitting at about 50-50. So that's a massive improvement. And I think that's really where we need to continue hunting. Now, if you take a look at the charts here, the S&P clearly looks like it wants to pull back. So here we are, still look at a decent level, but I think we can still continue to weaken here, maybe test that 20-day moving average. There's still quite a bit of a gap between the 20 to 50. So the markets, again, still have decent room to pull back before it can really get a little ugly here as far as the technical goes. But to take a look at outside of that, this is the RSP, which is the equal weighted index ETF. As you can see that this is a totally opposite picture of what we were seeing. This is not, again, the story, all the NVIDIAs and the big stock, big tech is really pulling the market down. But underneath, you can see that there was a massive rally. And then even the pullback today was pretty shallow compared to the run that we had. So I still expect that maybe there's a little pullback here, but that'll probably be a great opportunity to buy. Now, take a look at small caps. We're getting a little reversal candle today, but again, nothing really concerning here. We can still pull back. I know we had quite a bit of run. We can still pull back, and I think that'll be a great opportunity to kind of buy into as this broadening of rally continues to play out. Now, if you take a look at this heat map, and what do you see on the heat map? You're seeing the Apple, Google, Meta. Again, these are the names that are really bringing the markets down. NVIDIA down 6.62%, Amazon and Tesla. So this is, again, the opposite where, we used to see all this positive and everything else was negative. And now we are seeing a lot of green outside of that. Some of the stuff that really continues to work out as we're looking in the some of the sectors that are outperforming here. So that's really what we're going to focus on is the outperformance and then take a look at the underperformance. As far as the market outlook goes, even with this sell-off today, we're still on a healthy level, so as a +3, but I think we could expect some pullback in the broader markets. But at the same time, underneath the hood, we'll probably see other stuff continues to either stay strong or outperform the big tech. Now, take a looking at the potential trades. I definitely have more bullish than bearish. I have one sideways trade, but definitely more on the bullish side. Now, let's just take a look at it one by one. Now, the first one is Walmart. I've talked about Walmart in the last couple of weeks, and this thing is working out really nice. Every time it really makes that base, it actually breaks out and doesn't give a nice run. So you can see that even despite of having a negative day in the markets, Walmart broke out, something that we want to be continuing paying attention to or be part of it. The other one is Target. Again, this is something that looking for more on the upside potential. I know this has been on the downward trend, but this is where we are seeing some good value coming in, where some of those underperformers are now outperforming. So even a down day like today, it was up. So I like this more on the upside, and we'll probably see these moving averages start to turn as well. Now, the third one is Coca-Cola. You can see that massive breakout off that resistance level. This thing has been in this range for some time here. On a down day like this, we had a nice breakout here. So I like a further continuation of this Coca-Cola here. Now, the last one is Ford Motors, and you can see this thing on a massive run as well, made a base. Now making a nice little base here as well. I think maybe a few more candles in that base and probably for a breakout off of that. So I still like all these setups here to the upside. Now, let's talk about the underperformers and even a sideways play. So I have Mark as a sideways play, but outside of Mark, let's take a look at the underperformers, and that's going to be on DoorDash. As you can see that this thing was weak when the markets were rallying. Now this thing is weak as the markets are selling off. So this thing again is a clear, underperformer here. So I like it further on the downside here. And then lastly, take like a, if you want to be a little aggressive here, again, take a look at that turn we've seen in Micron. It had a massive reversal, made a base here, and a boom breakdown here as well. So again, I think maybe this is worthwhile taking a look at, that rotation. Look at the outperformers, probably continue to underperform, and the underperformers selected to outperform. I think it's worth taking a shot at those trades here. Now, as far as the market outlook goes, again, that's what I have. I think this rotation continues to play out, and to stay away from those big tech. I think there's a little bit more profit taking coming. Now, for the economic reports tomorrow, we have the unemployment claims, Philly Fed Manufacturing Index. And as far as the earning reports go, a couple of big names, TSM, Netflix. So keep an eye on those. That's the outlook. Thanks for joining. We'll see you next one. Happy trading.